Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news long-term interest rates are rising and have much further to go. But first, American private businesses added 122,000 workers to their payrolls in December, the least in 4 months compared to the 146,000 in November. That's according to the precursor ADP employment report. And that was below forecasts of 140,000. Hiring slowed in several industries, and employment in manufacturing shrank for the third straight month. Employment growth was strongest amongst large businesses in the West. Pay gains slowed slightly, but it's actually quite high, up 4.6% for those who stay in a job, up 7.1% for those who change jobs there. Meanwhile, initial jobless claims rose on the expected seasonal basis to 305,000 last week, but much less than those seasonal factors would have indicated. 2.175 million people are now on these jobless benefits, almost exactly the same level as a year ago. On a headline seasonally adjusted basis, initial claims fell, and by more than expected. Also falling were American mortgage applications, the fourth straight weekly retreat. Their benchmark 30-year fixed home loan rate almost touched 7% last week, deterring potential borrowers. Until the Trump risk goes out of long-term benchmark rates, this is going to be a problem for American housing and, in fact, all real estate transactions and other asset purchases that are valued based on yield. And those rising yields are now extending to very long-dated maturities. The US Treasury 30-year bond auction came in with a yield of 4.87%, up from 4.48% at the prior equivalent event just a month ago. The auction was well supported, but less than that earlier one. The rise in longer-term bond yields and interest rates is a global one. At its core is a demographic shift and aging populations. But the Trump return has focused investors on the long-term risks, and they're demanding a premium for that. Companies are also issuing more longer-term debt, and there's a supply element to the trend. The Biden Treasury tended to prioritise shorter maturities in its fundraising, but the incoming Trump Treasury has already signalled it'll go long, and that will add to the supply pressure and will spill out internationally. Pity American homeowners with 30-year mortgages. In China, they're getting more proactive ahead of the expected Trump tariffs and reactive about their stuttering economy. They announced an expanded set of taxpayer subsidies for a wider range of consumer products, hoping to spur sluggish consumer spending. They have expanded the 8-category subsidy program to now 12 categories, now including dishwashers, rice cookers and microwaves, which will all get a 20% discount from existing sales prices. Overall, it is a program that has grown to $2.8 billion and still expanding. In fact, this announcement was part of a much wider stimulus effort. They are battling consumer anxiety, a tougher challenge than the previous Democratic yearnings. Meanwhile, China is aggressively defending the yuan. It has held the official rate to the US dollar since early November at 7.19. It last had a fixed peg in 2008 to 2010. Unfortunately for them, offshore trading now has it at 7.35 and depreciating. In the EU, consumer prices rose 1.7% in November from October, the biggest monthly rise since September 2022. A seasonal rise in energy costs was the cause. Year on year, though, the EU PPI was 1.1% lower. And staying in the EU, economic sentiment, which had been stable for most of 2024, fell in December. Not a huge dip, but a notable one. In Australia, their monthly CPI indicator rose 2.3% in November from a year ago, after a 2.1% rise in the prior 2 months. Analyst estimates were for a 2.2% rise. The latest inflation level has remained within the central bank's target range of 2 to 3% for the 4th month in a row. And in maybe something of a surprise, there were 344,000 job vacancies in November in Australia, up by more than 14,000 from August. That is up by 4.2% and was the first rise since May 2022, when job vacancies reached their historical peak. However, year on year, the decline is almost 10%. In New Zealand, we got the benefit of strong commodity price gains in 2024. ANZ reports that overall commodity prices finished 2024 up 15% from a year ago. All sectors except forestry achieved gains during the year, but the largest were made by dairy, up 19%, and meat, up 23%. However, these sectors were more subdued in the December month. In local currency, the rises were even more impressive, up 29% for dairy and up 35% for meat year on year. The US Treasury 10-year yield is now just on 4.68%, and little change from yesterday. And the price of gold will start today at $2,669 an ounce, and up $18 from this time yesterday. But oil prices are down 50 cents at just on $73.50 a barrel in the US, while the international Brent price is just under $76.50 a barrel. And the Kiwi dollar starts today at 56.1 US cents and down 40 basis points from yesterday. Against the Aussie, we're down 10 basis points at 90.3 Australian cents. Against the euro, we're up 20 basis points at 54.4 euro cents. That all means our trade-weighted index starts today just on 66.9 and down 20 basis points from this time yesterday. And the Bitcoin price starts today at $94,646 and down 3.2% from this time yesterday. Volatility over the past 24 hours has been modest at just on plus or minus 1.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.